Welcome to Proven and Probable. I'm your host, Maurice Jackson, and joining me today is the CEO of Fission Uranium, Dev Randhawa. How you doing, sir?
Thanks very much for having me.
So we're here at your award-winning Patterson Lake South project. Talk to investors. What makes this project so unique?
Well, number one, the economics. When times get tough, it's always about grade. And what makes this project special is, well, first of all, Saskatchewan, Canada, very good jurisdiction. They're not going to take your land away from you. We don't have terrorists breaking us as it happened in Niger. So it's a very safe place legally and for other reasons. It's very high grade. Athabasca is known for its high grade compared to, let's say, being in Africa and other places. So safe, high grade. The third one is this deposit is 50 meters from surface. That means the high grade, the rich stuff, is 50 meters away, not 500, 600. And so that's what makes it special, very different from anything else out there. So it's having in the right jurisdiction, being high grade, but being so close to surface, which means you can open pit. Open pit is cheaper economically, but also when you open pit, you get everything. When you go underground, you don't know. As I've been cautioned by people at Cameco, anything under 200 meters, be careful. Recently, they just shut down Eagle Point, and that was 600 meters down. So it points to the value of being very close to surface versus being further down.
Thank you for sharing that. You know, from a value proposition standpoint, a lot of investors are always asking me, hey, Fission Uranium, everything, the stars are aligning. What's going on with the share price? Talk to investors about that.
Sure. Well, I think it's because even with Fukushima, there's more reactors being built today than before Fukushima. So it's not the number of reactors that start being built. The problem is the way utilities are buying uranium. They used to buy in advance of 10 years, but now they're buying it every 3 to 5 years. So as a result, for example, in a typical year, they used to contract 140 million pounds. Last year was about 56 million pounds.
Okay.
Right? So very little contracting is going on. So the sellers are still there, but the buyers are kind of gone. But this is the same situation we had back in 2000. You know, when we started a company called Strathmore, which was the kind of grandparent of Fission Uranium. You know, utilities were doing the same thing. Uranium prices were 13 to 15, and they wouldn't buy. Instead, they waited until it was 80, which makes no sense when you think about it, right? You know you need this stuff in 3 to 5 years from now, right? It's like your kid goes to university and you go, I know I need the money then, but I'll just wait, you know. And that's what utilities did. Instead of saying, so what happens? You're buying uranium at 70, 80, 100 versus 15. So unfortunately, it's and also uranium doesn't make up a big part of a nuclear reactor. So as a result, they can sit for a little bit on it. So, but you know what the good news is? The smart people in the industry, like CGN of China, they are the utility for the government, and they're thinking ahead. They've invested. They bought 20% of us for 82 million, and at a huge premium to the stock. And why? Because they want to be in Canada, which is safe, and secondly, want high grade, but they want something like a trucking operator, which is easy to understand. And so they spent about $2.5 million looking around the Athabasca for the best project. They did their due diligence, and so we're very glad to have them. It de-risked the project. But there's an old saying, you know, contrarians, you can be a contrarian or you can be a victim, like Mr. Rule always says.
Yes, he does.
Yes. So if investors really want to buy, they want to go chase the latest craze. You know, like gold stocks are going crazy, as they should. But people get lost not doing their homework. And I encourage investors to look at companies with good jurisdictions, well-managed, well-funded. Because as long as you're well-funded, you're okay to survive the tough times. And because I don't know it's going to be 3 months or 3 years. One thing I do know, when uranium moves, it moves violently, upwards or downwards. And so investors should have something in their portfolio that's contrarian to what's going crazy out there.
You know, you exhibit all the virtues that you just mentioned. You have the technical team, you have the management, and you're very focused on shareholder value. I know that because you and I speak a lot offline.
We do, yes, right.
Let's talk about, finally, what can be the catalyst here?
Well, one is that something usually happens on the supply side. Historically, it's always been something that happened like for example, take in 2003 and 5, we had a fire at Ranger, and then we had a flood at Cigar Lake, and bang. Little companies like Strathmore, I was starting, it was worth $2 million, now worth $500 million. And they went up, not a little bit, they went up crazy.
Exponential.
So, it's ridiculous, and so I think what it'll take is utilities getting off their butt, and what's going to happen is something has to happen in Kazakhstan, maybe the Athabasca. I'm not trying to curse them or anything, but it's usually that's what happens, and they all jump in at once. There's no doubt in our mind, China is the big elephant in the room that is going to dominate. We need power.
Yes,
by 2030, we need 75% more power than we use today. Think about that. And nuclear is part of that. You get nations like Saudi Arabia, the Emirates. They are home of cheap oil, but they are adding reactors because they have percentage of their energy to come in from that mix. And so the countries that don't care about politics and they don't have to keep moving left and right, they're adding nuclear to that mix. So the smart people are doing it. It's just unfortunately the momentum money is not there right now. But I don't think it'll take much. When it happens, it always happens very quickly. Like we're just saying, we're all sitting there in January moaning and groaning about gold price, and suddenly you look at today at those same stocks, they're up, not just up 10%, they're up 20, 200, 300, 600%. Some of these, and I'm talking big names are up 170%. And so it doesn't take much for the sentiment to change, and that's why you're better to be too early than too late.
Absolutely. Dev, thank you for sharing that. And for investors that want to learn more about Fission Uranium, what's the website and contact?
FissionUranium.com.
We have the website. We have the phone number. Is there anything else that you want to share with investors at all?
No, I think they've all got to do their own homework. I'm an investor who became a CEO. I was never somebody who said, I want to be a CEO. I put money into something, it didn't go right, so I took over the company and steered it back into uranium, and we'll make it a success. Do your homework, and there's some smart people, less smarter than I out there, that they should talk to. The analysts are good, David Talbot, Rob Chang, and these guys. They're smart guys. I would do your own homework at the end of the day, because I'm not licensed to give advice. So, but number one, but guys like Rick Rule say it best. You can be a contrarian or be a victim.
Absolutely.
And I think we don't want to be sheep out there.
Well, Dev Randhawa, thank you so much for joining us today on Proven and Probable.
Thank you.
Thank you for joining us today on Proven and Probable. Remember to like and subscribe for more conversations with the most respected names in the natural resource space. Check out our website at www.provenandprobable.com. The information presented on Proven and Probable is provided for educational and informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. The information is not intended to be and does not constitute financial, investment, or trading advice, or any other advice. You should not make any financial, investment, or trading decision based on any of the information presented without first undertaking independent due diligence and consultation with a professional broker or competent financial advisor.